And in our top business story, the International Monetary Fund has raised its 2016 growth forecast for the Middle East and North Africa on the back of a rebound in oil prices, but warned that Britain's decision to exit the European Union has further depressed the global economic outlook. The Middle East, along with Afghanistan and Pakistan, is set to see economic growth of 3.4% this year and 3.3% for 2017, respectively, up 0.3% and down 0.2% on the fund's previous forecast made in April, citing fallouts from terrorism and geopolitical tensions in its World Economic Outlook update. The IMF stated that the Middle East oil exporters are benefiting from the recent modest recovery in oil prices, while continuing fiscal consolidation in response to structurally lower oil revenues. The IMF maintained its growth projections for Saudi Arabia, the world's top crude oil exporter, at 1.2% for this year and raised it slightly to 2% for 2017. In addition, the Washington-based fund has revised down the baseline global growth forecast to 3.1% in 2016 and 3.4% in 2017, as compared to a 0.1 percentage point upward revision for 2017 envisaged pre-Brexit. The UAE jobs market has been one of the few bright spots in an otherwise sluggish period for employment opportunities across the region. The Monster Employment Index, a gauge of online job posting activities, showed that the UAE last month was up 10% year-on-year, with the healthcare industry setting the pace as activity rose 46%. The Monster Gauge's positive outlook for the UAE was echoed in Bahrain and Oman, but it showed a third consecutive month of year-on-year declines in overall GCC online recruitment. Online recruitment activity in the Gulf region fell 21% year-on-year in June to the lowest level this year, with a sharp 18% decline since March alone. Job posting activity in Egypt, Qatar, Saudi Arabia, and Kuwait fell 30%, 25%, 18%, and 9%, respectively. In the UAE, the index for top growth occupations showed that activity for healthcare professionals was up 31% last month compared to a year earlier. A broader measure of the healthcare sector, including ancillary staff such as cleaners, rose 46% year-on-year to set the pace nationwide. Next was the grouping of retail, trade, and logistics with 32% growth. Abu Dhabi Investment Authority, one of the world's biggest sovereign wealth funds, have revealed today that it would remain a patient, long-term investor despite a drop in its returns last year due to slowing global growth. The fund, in its annual review, stated that in US dollar terms, the 20-year annualized rate of return on ADIA's portfolio fell to 6.5% in 2015 from 7.4% the year before, with the 30-year rate of return slipping to 7.5% from 8.4%. The review added that the drop was mainly the result of strong returns in the mid-1980s and 1990s, falling out of rolling averages, and the recent returns were consistent with historical levels. Now in its 40th year and headquartered in the UAE capital, ADIA invests across more than 24 asset classes globally. It does not disclose the total size of its assets, but the US-based Sovereign Wealth Fund Institute, which tracks the industry, estimates them at $792 billion. The fund's key acquisitions in 2015 included assets in the US warehouse market, a 50% stake in portfolio of Hong Kong hotels, and investment in Germany's motorway services group, Tank and Rast, and Transgrid, an electricity transmission business in New South Wales, Australia. Last year also saw the completion of a direct investment by ADIA in Renew Power, one of India's largest clean energy companies. Emirates Central Cooling System Corporation, known as Empower, is to invest 1.8 billion dirhams over the next 5 years to cool 400 buildings in Jumeirah Village Triangle and Jumeirah Village Circle. Following a deal with the developer Nakheel, Empower will build 6 cooling plants in phases in the two communities, ultimately providing 260,000 refrigerating tons, with the first 30,000 RTs to begin in the fourth quarter of 2016. Empower currently produces 1.1 million RT to large-scale real estate developments in Dubai, including Business Bay, Jumeirah Beach Residence, Dubai International Financial Center, Palm Jumeirah, Jumeirah Lake Towers, and Ibn Battuta Mall. Commenting on the deal, Empower CEO Ahmed bin Shafar, it was in line with the Empower's expansion strategy and the growing demand for district cooling.